Good afternoon, Scott Rutledge, T3 Live. Welcome to today's recap. So it's Tuesday of the last week of the summer, and if you turn the TV on, all you're going to hear about is S&P 2000. Are we there? Did we close above it? How much off the highs are we? What does it mean? Where are we going? And you know what? It's just a bunch of noise. You have to look at where we were, where we came from, what's acting well, where the money's rotating, what patterns are tight, where you could add tiers, where you could sell into strength, things that mean something as a trader. And if you've been putting money to work and you're 55 years old for the past 20 years, you're probably real happy. Same thing if you started when you were 35 and now you're 45, or even 5 years ago. Anyway, if you had that macro plan, you actually like to read the newspaper and see market doing well. And even if you're well balanced with bonds and a little bit of everything, but if you're a trader, entries and exits matter, and some of these milestones could be a little frustrating to either trade or listen to or whatever. So as far as the trades, and today happened to be a good day for the VTF. I don't want anyone to get overly excited or like so jumpy and start doing all these other trades that to throw stuff against the wall because some of the names we've been tracking happen to do well. But that's what happens when you're prepared and when you're moving around and you're looking at patterns over the course of the last few weeks. You look at the S&P, and this is when you had your small little breakdown. Remember that? That was right around 1970-ish, and then this was that lower range, or that lower wedge, or that whatever the people were saying, the bear flag, which turned into an igniting bar in digestion. And then from there, look what took place. Okay, every step of the way, there were things to take from the action. This was your igniting bar to make you cover some shorts and get you from neutral negative to maybe neutral. Then here you could have got to neutral to positive when you digested above the resolution of this lower range and looked for good acting or the best acting stocks and the leadership stocks to get ready, because when the market powered higher, those acted best. If the bears had any control, okay, this push back could have been just an oversold bounce. It wasn't. It penetrated through and turned into another run, and look where we are now at 2,000, what is that, 2,070 and change. So maybe we did get that print. I don't know. It doesn't matter to me. But we've come a long way, so you definitely need to have a hedge on. And I know for me, having a hedge has taken some money away, but I've been net long for most of these days, so it's been fine. I try and add to strength on my hedge, and then we pull and I cover some and keep doing that until one of these days I'll be overly hedged with an overlay, kind of like what I had here when I wasn't sure what was happening there. And then maybe make some money on the short side as well, and then stay with strong stocks, because we are extended from the 8 to 21 to 50, and that makes it hard to do much. So you have to have a reason to really be in the names that you're in. So for me, if you look at the virtual trade floor, what I've been holding on to the past week or so, it's been pretty much a lot of the same names. It's been changing. My tier sizes have changed. As far as Apple's concerned, I came in today without the equity. I still have my call spread, which is good, because I want them to take some premium out of the 102s that I sold and the 104s. So today you had a day where it closed pretty weak. I did buy some Apple near the end of the day, okay, because I sold some strength near 102, and I'm thinking the 8-day holds. Maybe tomorrow we get a Red Dog reversal around today's low at 186, or if we open lower, we get a negative to positive move. So I'm not so worried that this is going to all of a sudden get crushed. So anyway, with that being said, this was your setup when you had the descending channel, Red Dog reversal, and triggered above. And now, just a trade to stick with if you're sticking with trades. We talk about Twitter and Facebook a lot, and today, Twitter finally, paid you for being very patient. So here's what you make from this chart, okay? Here's your gap up after earnings. It came in, and I know the action was very lethargic and grinding. Everyone's complaining, but when we turned higher, what'd you have here? You had a pro gap that was left open, showing you that the shorts couldn't press it to fill the gap, and long stepped in before it went lower and turned back higher. Then you had a nice clean trade right here. This is when we put the chart, in Twitter, in the Twitter sphere. So you can check the Twitter sphere for Scott Rutledge's chart saying, I think it gets back to the earnings per share high and gets into the 50s. And, you had some digestion yesterday, some power today, and I did clear this. So you would think you'd get some follow through tomorrow, into the open. Next real level here is what? This is 49.89. So I don't know, this week you could see this. I know on the virtual trade floor you also saw that we bought some calls, I think on this day. So maybe if it gets a little bit higher, I'll sell a spread. I do think, the reason why I said, like 55-ish is because here's where you have some resistance. That's also where it was trading after hours. So this would be a reasonable move. That's not even like a crazy blockbuster go nuts move. That's just a reasonable move based on the pattern. And look where Twitter was, way back here. So on its way. Facebook, not as strong, but Facebook had a similar pattern when we started to really get bullish on Facebook down here. What was similar to Facebook? This is when it had a big gap up. And what happened? It held the gap up. It ignited a move. And then, since then you've had a really nice trend, okay, in Facebook, where we've been trading it, navigating it. Sometimes it's better than other times, but overall, this trend has been strong for the bulls. Recently, we've been looking really closely to this. Okay, this definitely filled a bit more of the gap from earnings, but it still held a decent amount of it and started turning higher. I think I put the chart on the Twitter sphere here, okay, just to get people prepared. I've been, I think, long Facebook the majority of the time, saying this actually looks like a cup and handle pattern, even though it's somewhere in space. So above here would be your add, which was 75.58, and that's what happened today. And now tomorrow, or the next day, we'll see kind of, get back up to its earnings high, and then that's actually an historic high. And usually you get above a historic high, and then all those price targets of the 80s and higher could come to fruition. So I'm in this, and I'm in it for a reason, even though the market's a little bit overbought. Same thing with Twitter. I'm not sure if I have more than I had the night before or whatever, but I still like it. This is an A play for me. Haven't really done much with Yelp or LinkedIn, but they too, have had decent moves. The calculated move right here, another calculated move right there, and now it's, hovering by this tail. Looks okay, and continues to go. LinkedIn's starting to get real choppy again because it's had such a nice move from its gap up after earnings. Look at that. When a gap up happens and it doesn't get filled, typically you stay in the same direction of that gap. And it's been following the 8-day. I know I had a little short right here after all those days up, but lost a little bit, and now it's, now I'm just not trading it because it's too choppy. You don't have to trade everything. You pick a vehicle that works for you, and you try and stay with it, and you use it to your system. And if it's choppy and you're not sure, you do some options so you don't watch it as close. And the virtual trade floor was making fun of me because I think I was crying, maybe not crying, but like complaining the last day or so, saying, I'm in all these options of these concept plays that I really don't like, and I'm in them because I don't trust them overnight. But I think that they're decent ideas and they could work. And one of them happened to be this ARWR, okay? Whereas I think I bought it here in this flag because there was some talk that there's going to have some data in September. I was like, oh wow, this chart looks good. Let me just buy some 15s and 16s just because, if something happens, I could be involved and risk is premium paid. It was as high as 28, and then above this technically it can go. And then my options started to get beat up here, and I'm like, oh, those are a 0 probably. Some guys actually bought more options who really believed in it. I just did it because as a tier 1 position. And then some news from one of the analysts out there that it could be a double, et cetera, et cetera. And here was a nice technical move. So we'll see what happens tomorrow. Maybe some digestion, then it goes again. This 18 is your next spot. Overall, looks pretty good. I did the same thing with this, the GWPH, because technically it didn't go yet, but I was thinking that at some point it does. Okay, so on this day when it ignited, okay, now I was long. What's it called, the stock, and then the next day you had no follow through, and then it finally flagged again, and I'm like, in this mess, I'm just going to buy the options because at some point, if something really good comes out on it, it probably goes above 100 and takes out 110, and my options went to like half of what they were worth, so I'm like, another option play out the door, and then boom, now they're back to where they were. And as a momentum trade, I said it's got to get above 93-ish, to buy it for a day trade. So it was a great day trade today, closed strong. So I have a little bit overnight because this is a good chart and it should get another day. If it opens down a little bit, maybe it goes from red to green through it. And with a day like this, and you look, what's important about something like this is the volume. You go to the volume, nice volume today. So to me, that says it could continue. So something to stay long, and hopefully, maybe the options will be a great big ticket. We'll see. As far as the financials, I got out of my Morgan today. It's been on the virtual trade floor since Thursday. So what's that, Thursday, Friday, Monday, 4 days. And look what Morgan did in 4 days. Nice move, okay. I'm not saying it can't go higher, because I do think it can go higher, but for me, I bought it on this day, and now I just would like to see some digestion. It's still away from all the moving averages. If it could hang in here another day or so, I'll probably buy it back when it gets above this area and creates a flag, above the recent breakout. I just felt like I just wanted to take some risk off, so I took it off. I took off Goldman yesterday. That was a nice trade also, and then at some point I might put this back on. This was my calculated trade here, and now if it stays in this and creates another flag, perhaps I'll buy it back. But nice move in the financials, so I just, some things I got to take. I also took off the EWGs, which was getting long Germany. We talked, if you come back to me, that the DAX 12% off the highs could be a great opportunity for your long-term account and maybe even just for a trade. And the EWG had a nice move. Okay, this is where you had your breakout failure. This is when the trend broke. This is when it broke the 200-day. I still think it might even have more upside, but for me, something wound up being a nice cash flow vehicle. And in here is when I started to get long it, and it was a little wishy-washy, especially on this day, and then on this day, and now into this. It was a nice percentage move, maybe 2% or so for an ETF and a country and the DAX and whatever. And it's still a little bit broken, so it has a lot to prove. So I just took it off to have a little less exposure, because when a market becomes pretty overbought the way we are and extended from all the moving averages, I want to just stick with things that I really like, because if we do pull in a little bit, the things I don't like that much or my peripheral plays, I'll probably get a little bit cheaper or so. I've talked about Google, the potential of it having a nice move in the fall, but it still hasn't triggered yet. It's still right around the 21-day, and guys were asking me today, when are you going to put your feeler on? It really hasn't shown me anything yet to put my feeler on, except for it's just flagging. So one day it might gap up and I have to pay up for the feeler, but for me it doesn't really turn on as a trade until it gets above and closes above 598-ish. We did have a nice day trade in Amazon today. Those on the VTF, we've been waiting for something pretty solid with Amazon, and it woke up when it had this gap up right here on earnings, and then not on earnings, whatever that news was then, this was your gap down on earnings. And today started buying it somewhere around 337.50, and I think I sold it 342. It was like a $3-4 trade. Nice day trade into the gap. Could continue, but I took the trade out. Me and Amazon don't get along so well. I usually don't make money in that trade, but it was a good one today. Another thing to do, if you happen not to be at the beach and you looked at the setup and you read the Red Laurel Access note, it was in there saying perhaps above 337.50 we get another trade. Hopefully you're using your resources. And I'm not here just to sell product, because 90% of the money that I make is all for my trading. But we have a business, we have a studio, we have lights on, so we have some products. In order to get people to deliver the products and package it nice so you could have it, we have to sell some and charge some money. So if you're watching this on the Twitter sphere and you're like, oh, how do I get ideas, and how to, instead of listening to the TV set about S&P 2000 all day, there's this thing called Red Laurel Access, which you can go to the front of the site, t3live.com, and you'll see that I think it's a pretty low cost product that has a note every day, which is what I think the value is. I think the note is the value. The note has about 25 to 30 names, which are the names that I'm going to look at, the names that I'm game planning on, the names that it might be my daily money, my swing trade money, and that's my strategy to approach the day, which could be something you read, and if it matches up with yours, great. I also talk about the market, and you could also see my positions. Then I have a private Twitter feed where I have less people on that. If I see you ask me a question, I can see it better. The private Twitter feed is not, a push out, I'm doing this, I'm doing that, I'm doing this. I try and do that, but it's more like, okay, you have a question about what's on the note, you have a question about the video, you have a question about, because there is a long form video. That's what the private Twitter feed is for, also to be a little bit more intimate, because my big Twitter feed, some things get lost because there's a lot more people on there. So that's one thing. Then you have also Off the Charts, which is a visual, which goes out many nights during the course of the week, which you have a lot of the contributors that give in their charts, and usually they're swing trade ideas that, again, if you're looking for ideas, 1 or 2 ideas a month could more than pay for your yearly subscription of Off the Charts, if not more. And then there are other things. So, there's a lot of resources out there, whether you use ours or someone else's. The real way you're going to make money is by having your own game plan, learning why we're putting things out there, match them up so you could have conviction to execute and make money yourself. We could hopefully teach you how to fish a little bit, throw some fish in your boat, but it's really you that has to know how to, cast it out, bait the hook, and whatever all these stupid analogies I'm trying to say, as I'm a little tired today. So it is Tuesday. Tomorrow's another day. Hopefully, things present themselves. I've been coming in each day, with just low expectations and been pleasantly surprised with some of the trades that have been in front of us. And let's hope it continues. And we'll see what's in store for us next tomorrow. Have a great night and happy last week of the summer. Yes. Bye-bye.